Chapter 5, Rising Tide, Altcoins and Ethereum, 2015-2017. By 2015, Bitcoin had survived its first major cycles of boom and bust. Its scarcity had been tested through halvings, its price had soared and crashed, and its community had learned valuable lessons about infrastructure, security, and market psychology. But the story of cryptocurrency was far from complete. While Bitcoin remained the undisputed pioneer, it had also revealed its limitations: slower transaction times, limited programmability, and a focus solely on money rather than broader applications. This gap gave rise to a rising tide of altcoins, cryptocurrencies that experimented with new features, visions, and ambitions. The era of altcoins. Altcoins, literally alternative coins, began as experiments in adaptation and innovation. Developers took Bitcoin's open source code and modified it: faster block times, different mining algorithms, or added privacy features. Litecoin, 2011, known as the silver to Bitcoin's gold, it offered faster transactions and a new hashing algorithm, script, making mining more accessible to home users. Namecoin, 2011, introduced decentralized domain registration. Dogecoin, 2013, began as a joke but became a community-driven currency with high liquidity and viral appeal. These early altcoins highlighted a crucial truth: Bitcoin was a trailblazer, but the blockchain ecosystem could be much broader than just a single currency. The birth of Ethereum. The most transformative innovation came in 2015 with the launch of Ethereum. While Bitcoin focused on peer-to-peer money, Ethereum introduced a new concept: programmable money through smart contracts. Conceived by Vitalik Buterin, a young Russian-Canadian programmer and cypherpunk, Ethereum allowed developers to build decentralized applications, dApps, directly on its blockchain. Smart contracts were self-executing programs that ran exactly as written, without downtime, censorship, or interference. They enabled everything from decentralized finance, DeFi, to games, marketplaces, and governance systems. Ethereum's launch ignited imagination across the crypto world. Suddenly, blockchain was no longer just digital cash. It could be a platform for entire decentralized ecosystems. Initial coin offerings, ICOs, Ethereum's programmability enabled a revolutionary fundraising mechanism: the initial coin offering, ICO. Entrepreneurs could now create their own tokens on Ethereum and sell them directly to the public, raising millions in Bitcoin or Ether. 2017 became the year of the ICO boom. Ethereum-based projects raised unprecedented sums. Investors, drawn by tales of quick profits, poured money into new tokens. Regulators scrambled to understand these new fundraising models, as scams, failures, and successes coexisted. ICOs demonstrated both the promise and peril of decentralized finance: democratized access to investment on one hand and speculative bubbles on the other. Bitcoin versus Ethereum, a new paradigm. Ethereum's rise did not diminish Bitcoin but reframed its role. Bitcoin remained digital gold, a store of value secured by a robust network and scarcity enforced through halvings. Ethereum became digital oil, fueling applications, contracts, and complex financial instruments. Together, they define the dual pillars of cryptocurrency: Bitcoin, money, scarcity, and trustless settlement; Ethereum, programmability, innovation, and decentralized applications. Growing public awareness. The altcoin boom and Ethereum's launch brought cryptocurrency into the mainstream. Tech blogs, mainstream media, and investors now discussed blockchain not just as a financial novelty, but as a potential technology of the future. Entrepreneurs around the world were inspired. Startups, developers, and hobbyists explored new tokens, new platforms, and novel applications. Crypto meetups multiplied, and conferences flourished. The road to 2017's bull run. By 2016 and early 2017, Bitcoin and Ethereum were both gaining traction. The second halving, 2016, had tightened Bitcoin's supply, and Ethereum's dApp ecosystem was expanding. This combination created fertile ground for explosive growth, increased adoption and awareness. ICOs flooding the market with new tokens, media attention driving mainstream curiosity and speculation. It was clear that cryptocurrency was no longer a niche hobby. A new financial paradigm was emerging, one with diversity, innovation, and volatility baked in. Risks and challenges. The altcoin era also highlighted the risks: speculation. Prices surged without underlying fundamentals. Fraud and scams. Some ICOs vanished overnight. Regulatory uncertainty. Governments struggled to classify cryptocurrencies and enforce laws. These challenges foreshadowed the crises of 2018-2019, but for now, the rising tide carried all boats. The cultural shift beyond technology and finance, altcoins and Ethereum, represented a cultural shift. The cypherpunk ethos evolved into a global movement. Communities formed around shared values: decentralization, transparency, and financial sovereignty. Cryptocurrencies became a symbol of resistance against traditional financial systems. Developers, miners, and investors no longer saw themselves as passive users of a network. They were participants in a new digital society. Conclusion: the dawn of decentralized innovation. By 2017, the cryptocurrency landscape had transformed. Bitcoin remained the standard-bearer for digital money. Ethereum opened a world of programmable possibilities. Hundreds of altcoins experimented with new visions, some successful, others fading into obscurity. ICOs created a new frontier for capital formation and innovation. The rising tide of altcoins and Ethereum demonstrated that cryptocurrency was not a single invention, but a movement of ideas, each project adding layers to a growing ecosystem. The stage was set for a historic bull run, where prices, speculation, and global attention would reach unprecedented levels, and where the crypto world would learn lessons it would never forget.